FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video guys, what we're going to do, so we had a comment in the comment section of one of my last videos where someone was having issues getting tricked by type 2 patterns and type 3 patterns. Essentially they would get tricked into thinking that it was a type 2, but then it turned into a type 3, or it was a type 3 and it turned into a type 2. So how can you avoid getting tricked by these patterns that could look very similar to each other? So that's what we're going to talk about in this particular video, guys. So without further ado, let's get this started. All right, guys, so what we're going to do is I'm going to go ahead and I'm just going to hopefully give you a simple way that you can avoid getting caught up by either a type 2 or a type 3. So let's draw out this Asian session here, right? So we have the Asian session, and then basically we have price action coming back and forth like this, and then we know that type 2 patterns, right? They basically go, let's say, to the top here in this example. And so it'll go to the top, make the M, and then come down. Type 3s end up doing a movement like this, where they do that. Okay, they look like they're starting like a first leg of a type 2, but then obviously break away and go higher. Right? So the main difference between a type 2 and a type 3 is basically type 2s get stuck at the top, while type 3s get actually stuck in the middle of the range. So how do you tell the difference and not get suckered into a trade that's not, you know, a type 2 or whatever the case may be? So the simplest answer to this is basically directional bias. Okay, so let's picture this. We're coming off a peak formation high, okay? And we're coming down and we're consolidating here. And let's say this is the Asian session, right? There's your Asian session. Price action is moving like this, okay? And let's just extend this out real quick. There's the Asian high. And let's say that if we're expecting a type 2, right, type 2 is going to do this for sell, right? We're coming off of a brand new peak, so your directional bias tells you that you're looking for sells only, okay? So you're not going to get caught up in a type 3 here because you're looking for a sell. If it was a type 3 pattern, if this was a type 3 pattern, the type 3 pattern would look like this, and it would be a buy. Okay, so a type 3 pattern to sell in this scenario, because type 3 patterns can certainly appear as a sell option, right? So the type 3 pattern for actual sells would look like this. So it would look like this, or another option would be it would look like this. So as long as you have your directional bias, like, it's very hard to get tricked by type 2 or type 3. All right. So I think that's probably the best way that you can avoid getting caught and misinterpreting what pattern it's trying to show you on that particular day. Again, and this is a selling situation, right? So obviously the type 2 pattern for a sell is going to look like this, right? And it's going to go, you know, go down. But a type 3 pattern, okay, for it to be a sell, most likely, okay, most likely it's going to be, it's going to end up coming either, it can come from the top, it'll do this, and it'll get rejected right there at the 50, or it can come from the bottom like this and then just get rejected from the 50 there, like that. Okay? if you're getting confused, or if you're getting caught up in the wrong pattern, it's probably because your bias is completely wrong. Right? You're not going with the directional bias essentially. Because if you're coming off a peak formation high and you're seeing this, right, and you're not saying, okay, I'm going to take a sell, I'm just going to take whatever appears, right? And so if this starts to appear, right, you're going to think that it's probably going to be a either a type, it could be a type 3 or it could be a type 2. You don't know, because once it gets rejected here, you may think it's a type 3, but it could also be a type 2, right? You don't know that. So the way to avoid that is knowing your directional bias. If you know what your directional bias is, you know how the pattern is going to develop, or how the pattern should develop in your directional bias. If it's a sell, the only thing a type 2 pattern is going to develop is basically like this, right? It's going to develop as an M like that. If it's a type 3 sell, it's probably going to come from the bottom, stop in the middle, and then get rejected like that. Okay, there is a possibility that it comes from the top, right? So it'll come like this, but still, there's no confusion that you could possibly get between a type 2 and a type 3 there. So the simplest way to avoid the confusion between type 2s and type 3s is obviously just going and knowing your directional bias. All right, guys. So hopefully this will help you not get caught up in those particular traps between type 2s and type 3s. And I hope this video was helpful for you guys. Thank you so much for watching. Until the next video, guys, have a great rest of your weekend. Guys, if you need any more help, join us on FXN Plus. It's available right now on fxntrading.com. You'll get a lot of different value from FXN Plus. For example, blueprint videos, 9 sessions, 14 hours long, over 100 hours right now of group session videos from the past 2 years. Over 100 hours we're up to right now on these sessions. You also get weekly sessions every Sunday. Ask as many questions as you want. I actually give a weekly analysis during those sessions, and I also give a midweek analysis that I put up on the website for everyone to see as well. You get access to the MT4 and MT5 indicators that everyone asked for. That's how you get access to them. Private group, trading plan, custom trading journal. I mean, everything you could possibly want is on FXN Plus. Guys, join us there. If you need any more help, we'll be more than happy to help you. We'll see you on FXN Plus.